Capital can move with the click of a mouse and the speed of light. The more tools you have, the more different choices you have, give us as portfolio managers a way to satisfy our clients' objectives and our needs.
When you have 900 people plus, as we have today, clearly you have a lot of the industry people, but we have an amazing number of financial advisors, registered representatives, private bankers, all the industry analysts.
It's definitely a worthwhile conference in terms of like just kind of meeting people and just learning everything kind of up to the state of the minute. So it's been great.
For the professional, this is a gathering place which you can't miss. The speakers, the quality of the speakers and what they have to say. And as the day went on, and you could see that there were far more attendees than there have ever been in the 9 years that they've had it to date.
Our perspective is delivering a product to the consumer, and we have to ferret out these types of people. Who do we want to work with to represent for our clients to make money?
The challenge now with closed-end funds or discounts are at 2% on average for the industry, which is as narrow as I've seen it in my 10 years in the business. So knowing where to find quality yield, knowing how to protect downside risk and liquidity, these are all the same factors that we listen to all day long. It's nice to hear it from other specialized folks in the sector.
When you look at global growth trends right now, emerging markets represent about 1/3 of global growth. From our perspective, we think investors should really give consideration towards significantly increasing their allocation exposure to these emerging markets.
Closed-end funds are designed for income. Their major benefits are the fixed capitalization, the active management, and the control and execution. The biggest risk factor is liquidity and the discount widening on you. And so just learning what information is available to look at those factors, but whether from the vendors here or the other analysts that are presenting here, and just knowing how to apply that to the work we do on our clients' behalf.
I think it's a little more hopeful than it was last year. People are more kind of, all right, we're going to move on forward to business and start to look at growth a little bit versus just total defense.
I've spoken every single year at this event, and it has been growing. The quality of the presentations continues to improve. Every single presentation that I attended this morning was just fabulous.
And over the next 5 years, growth in the developed world is predicted at 1.5 to 2%, but for the emerging world as a whole, it's between 5 and 6%.
I guess what I'm going to talk today is about developments in the Latin American market over the last 10 years or so, and why we believe that Latin America represents a pretty attractive long-term investment opportunity now. Versus the rest of the world.
Presentation by my colleague Nick Robinson was talking about Latin America, equity markets, and also developments in Latin America which support investing in these equity markets, and very similar themes there that we see, for example, in Brazil with much lower inflation, high growth rates, very good return opportunities that we see. When you look at the favorable debt and fiscal trends in emerging markets compared to the fiscal challenges and the high debt levels in the developed world, we think emerging markets are comparing very favorable to the larger countries in the world. So hence another reason why investors should be increasing their exposure to emerging economies.
One of the areas that we're very focused on at the moment in terms of investment is within the consumer companies, as we believe that the consumer is a very powerful theme within Latin America and is likely to be a theme that persists for 10 years or so.
We've had very good experience with the Aberdeen funds in particular, and the quality of the management, the fact that they have an approach similar to our own, which is basically a lot of diligence, what they call boots on the ground, which means whatever countries or areas that they're operating in any places in the world, they meet the companies, they interview the managements, they do very careful research.